Good morning and welcome to the Business Lens on Rapid Television Abuja. It is great to have you with us on this edition where we look at how all the numbers and figures directly affect you and your businesses. My name is Divine Alex. So let's begin with the key business trends that matter right now, starting from the headlines. The Central Bank of Nigeria has once again retained the monetary policy rate at 26.5% as policymakers continue to balance rising inflation pressures with broader concerns around economic stability and growth. Now, to the next, where Nigeria's external reserves have rebounded to $49.49 billion in May 2026, according to the Central Bank Governor Olayemi Cardoso, signaling easing pressure on the country's foreign exchange position after recent declines earlier in the year. Away from that, we have the National Pension Commission and the Nigeria Labour Congress that are set to begin a nationwide crackdown on employers failing to remit workers' pension deductions, with enforcement scheduled to commence from June 1st, 2026. And next, the Federal Airport Authority of Nigeria has activated enhanced Ebola surveillance and emergency response measures across all international airports. This followed the renewed concerns over the outbreak of the Bondibuko strain of the virus in parts of Central Africa. Now, away from that, the Nigeria's growing crude oil exports helped push total trade between Nigeria and the United Kingdom to £7.6 billion in 2025, with oil and gas remaining the dominant drivers of trade relations between both countries. Still in the international phase, we have news that South Africa's inflation rate has accelerated to 4.0% in April 2026, reaching its highest level since August 2024 as a result of rising fuel prices that continued to push transportation and broader consumer costs higher across the economy. I know that you're wondering when Nigeria is going to get to a single-digit inflation. We'll get there gradually. Now, away from that, let's move straight to the markets. The Nigerian exchange closed lower on May 20th, 2026, as bearish sentiment dragged the all-share index down by more than 2,500 points, pushing the market below the 250,000 points mark. Now, we will look at all the stories and more after the break. I am Divine Alex. Stay with us. Welcome back. This is the Business Lens of Rapid Television Abuja. Now we are going to have this conversation on Nigeria's financial markets. Now, Nigeria's financial markets in 2026 have become a real-time reflection of the country's broader economic contradictions, a booming capital market on one side and a tight squeezed money market on the other. Now, from January to May 2026, the Nigerian fixed income market delivered some of its strongest sovereign returns in years, with the 364-day Treasury bill peaking at 18.47% in Q1, while the Central Bank of Nigeria raised about 4.86 trillion naira through treasury bills alone in the first quarter as investors rushed into high-yield government securities. At the same time, the Nigerian exchange witnessed massive investor optimism, with market capitalization reportedly rising from about 99.94 trillion naira in early January to nearly 128.97 trillion naira by late March, translating to roughly 29 trillion naira in investor gains within the Q1 alone. But beneath these numbers, these headline numbers, lies the bigger question. Is Nigeria building a productive investment economy, or simply rewarding speculative and risk-free capital while businesses and consumers struggle under elevated borrowing costs? Now, the CBN's Monetary Policy Committee also became one of the biggest drivers of market behavior this year. After aggressively tightening policy through 2025, the MPC cut the monetary policy rate by 50 basis points in February 2026 to 26.5% before holding it steady again this month, May, amid inflation and global uncertainty concerns. That decision immediately affected Treasury bill yields, the bond pricing, equity valuations, investor rotation, liquidity conditions, and even foreign portfolio. Now, the conversation now is no longer just about the inflation, it is about the future structure of Nigeria's financial system, the cost of capital, and whether monetary policy is helping or hurting real economic growth. Now, I have with me Peter, okay, who is a financial educator. Good morning, Peter.
Yeah, good morning. Good morning.
It's good to have you on the show this morning. Now,
thank you. It's my pleasure.
All right, thank you. Now, before we start discussing, or taking a look at the Nigeria's capital and money markets, what do you have to say about the fact that the MPC court, has a way of affecting the market behavior?
Yeah, thank you for that question. The thing is that think of the MPR court. We see that the price of money market in Nigeria is already recalculating everyone. And the thing is that anytime the price is cut, we'll see that it affects the money market yield, like treasury bill, like fixed investment.
Okay.
And we know that people are already building confidence in the market. So what I'll say is that if you look at what happened yesterday, it was not cost, it was just live at a normal rate. We'll see that this will give investors more confidence about the market, and then more people will confidently put their money into treasury bill, especially the money market.
Okay, thank you so much for that. Now, I have a lot of other questions as regards to the money markets and the capital markets, linking them to the MPC. But let's start from here. When you look at Nigeria's capital and money markets, from January to May this year, would you say that we are witnessing genuine economic confidence, or are investors simply chasing high yields because of the risk-free government instruments that have become too attractive to ignore?
Okay, honestly, I'll say it is of both. It is of both.
Okay.
The thing, investors, they are attracted to government instruments because of the yields are very high. If you look at treasury bill right now, according to the result that came out yesterday, the 365 days of treasury bill is about maybe 18 point something, over 18% of 365 days.
Okay.
And it is very hard to see more because the naira stability and our reserve are now stronger. And Nigeria also got sovereign upgrade from international like FTSE Russell. The upgrade that we got is giving a good signals to the investors for the fact that people want their money to be saved and also bringing profit for them. They also want to enter the equity market. So for maybe low conservative investors, as for they are happy, they are happy that the money market yield is actually increasing, and also they want to put their money into equity market.
Okay, now, when we talk about treasury bills, right? Because when treasury bills are delivering yields around 18% and above, now many investors naturally begin to ask, why take business risk at all? What do you have to say to that?
The thing is that if you want small profits, you go for treasury bill.
Okay.
If you want huge profit, you go for equity market. You go for it. It's not everybody that loves risk. Some people just want to preserve their capital and they want to be making as little as they can make. But other people like us, we love the equity market. We want to go all. We want to take the risk.
Now, would you say that this is dangerous for the SMEs? Or how dangerous can this be for the SMEs?
It is neither dangerous and it is not actually good. Let me just balance it like that. Because now, if you look at it, it is not something that I don't know how to put it, but it's not actually dangerous. But just that now that if they want to borrow money, you know that the interest on their money is not cheap again. It's not cheap again. And many people will not actually want to put their money into SME. They would love to put it in the treasury bill. That they know that at the end of the day, their capital is to some extent safe. So it is not actually good for SME.
Now let's look at this now, the effect that this is going to have on the economy. Are we gradually creating an economy where government borrowing crowds out private sector investment?
Can you come again?
When we look at the response you just gave me to the economy, are we gradually creating an economy where government borrowing crowds out private sector's investment?
Mm, mm, mm. That is a very huge, very difficult question.
Okay.
But nevertheless, what I would say to that is Nigeria is good environment for business. For the fact that this thing is going on, people are still borrowing money to do business,
Okay.
and they're actually making profits.
And they're actually
So
making
it is
profit.
risk to risk.
Okay. Now, the Nigerian exchange has seen enormous expansion this year, with market capitalization gaining roughly 29 trillion naira within quarter one alone. Yet the average Nigerian still feels the severe, economic pressure. How do we reconcile a booming capital market with widespread economic hardship? Are you there?
Okay, thank you for that question. Very important one. I'm with you. The thing is that the stock market is different from what we are experiencing in our homes, in our personal homes, because the thing is that the market captures what big investors expect tomorrow. Your household budget is different. It's actually different. When inflation is high, companies sell goods. Companies the likes of UACN, Unilever, Boa Food. When inflation is high, they sell foods, and actually they record high revenues. They record high revenue because of the inflation and because of the revenue they generate. Fundamentally, the stock will rise. The stock price will rise. So, it looks good on paper, but for the fact that the stock market is booming, that does not correlate with what people are experiencing in their house. It's actually different. It looks good on paper, but it's different from what ordinary people are experiencing. And another thing is that a rising market just tell us investors they are just optimistic. When you see high revenue, if you see the Q1 2020 of 2026 result, you see that majority of this telecom consumer products they generate high revenue, very high revenue, and investors are so optimistic, and that is what is actually driving the price. It's not what ordinary people are experiencing. It does not tell us, because the stock market is increasing, does not tell us that the petrol price is cheaper or maybe school fees is easy to pay. Thank you.
This year was the MPC's February decision to cut the monetary policy rate by 50 basis points to 26.5%. Do you think that this helps us understand how a single MPC decision transmits across both the money market and the capital market almost immediately?
Yes, thank you. In the money market, yield on treasury bills and commercial paper, it will start to drop. It will start to drop, and because the money is now slightly cheaper. But in the capital market, investor will begin to ask the question that why should I lock my money in bonds? Because of the lower yield when equity can give me more. Look at the equity. I think the market capitalization is over 60%. It's over 60%. I think it was that it's dropped. The market capitalization is over 60%. So investors will be like, why should I put my money in bond when the stock market is booming? I can put my money in the stock market. So what will happen is that investors will start to rotate their money into stock, and they because they are now rotating their money into stocks, the price will start to push up, and it happens very fast. It happens very fast. It happens very fast.
It happens very fast. Now, we also saw stronger appetite for equities as investors started repositioning ahead of a possible easing cycle. So can you walk us through the transmission mechanism?
Transition mechanism, can you come again?
I said, when we talk about the market performance between January to May 2026, right? We saw stronger appetite for equities as investors. You even mentioned it earlier. Now, can you walk us through the transmission mechanism of how the whole situation with the stronger appetite with equities markets?
Yes, thank you for that. If you look at the government policy that we have now, it's actually helping the investors. The stability of our currency is actually a good thing for people, and also if you look at the retail participation, because the retail investor participation in the equity market is very, very, very high right now, that they even have the power to, to drive the market in the equity market. And if you also look at the international rating we are getting for one from FTSE Russell and then another one from S&P that we just got recently, it's also building investor confidence to put money into the stock market. And also many policy like the removal of subsidy also strengthen the Nigerian stock market, strengthen the market. And also the Dangote refinery that is coming soon, that is also a good sign for people to position themselves in the Nigerian stock market. And the Nigerian stock market, you see, is performing better than before. We have stronger institutions. We have institutions that are now protecting investors, and their confidence is actually going up. I tell you, we have never seen anything. The market is still going. I'm still bullish on the market.
Okay, now do you think that the market is already pricing in further rate cuts later this year, or do inflation and global uncertainties still make the CBN cautious, and as well the markets?
I think it's a global tension and the inflation that is happening. Those are the things that are actually affecting the market right now.
Okay.
But let's see what maybe in the Q2. Let's see the result of Q2, and let's see maybe we have some reasonable changes.
Okay. Now let's look ahead. Do you believe Nigeria is entering a structural shift in how capital is allocated within the economy, especially now as institutional investors continue balancing between fixed income securities, equities, commercial papers, and alternative assets?
Yes, I believe we are. I believe we are slowly, but it's clearly that we are. Because if you look at a few years ago, the normal choice of Nigeria and institutional investor will be government bonds, and they will stop there. They'll put their money into fixed investment, maybe FGN service bond or the Sukuk bond. They'll put their money there and they will stop. But today you're seeing more appetite for equities. More appetite for equity. Look at what happened to the pension fund. Even the pension fund, they are also positioning themselves into the equity market. And this is a good sign for investors because it gives us more confidence. The equity market, the commercial paper, the real estate investment, and the also alternative assets. And also one of the things that will also drive the equity market is the recapitalization of banks. This recapitalization of banks, the pension fund reform, and more stable exchange rates are all pushing this diversification. I tell you that people will not put their money out of the fixed FGN saving bonds, and they will also test the water of the Nigeria equity. I tell you.
Okay, now because I wanted to talk about the pension funds at the same time you already mentioned that. Now, do you think that this could reshape Nigeria's financial system over the next few years?
Yes, it's going to shape Nigerian financial system.
How?
Because the thing is, investor will gain more confidence in the market.
Okay.
And we know that it's not just only institutional investors and the retail investors that are investing into the market, even institutions. And the more institution comes in, the more we feel safe, the more we feel confidence about the market. The pension fund are coming, and they are not coming with small money. And also the IPO of Dangote refinery is also giving giving the Nigeria equity market a good sign. Even the international attention is they are now focusing on Nigerian markets. They are focusing on Nigerian market. And I tell you, for the rest of this year, the Nigerian stock market will be bullish, I tell you.
Okay, so now what sectors do you believe are most likely to attract, serious capital flows in the second half of 2026?
Okay, when it comes to sector, we also have to understand the liquidity of each sectors.
Okay.
Well, I would say it will be banking sectors. It will be banking sectors because that is where we have high volumes of liquidity. So it will be the banking sectors. Though there is a policy that is supporting the insurance sector, but we are still waiting for the manifestation of that policy for the insurance sector. But I tell you that it will be the banking sectors because of the high volumes of liquidity.
All right, thank you so much for that one. But before you go, is there any other thing that you want to add? Plus, I would also like to get your input. What if I am a new investor trying to come into the capital market, trying to come into the money market to see how I can make the money work for me? how would you advise this person to take steps, gradual steps, practical steps that can assist this person to get into this place and then make something?
Okay, thank you for that. The first thing I'll say is that the market is here to stay. It is not going anywhere. So what I tell people is that to get them to get what we call financial education. Financial education is very, very important. You should have knowledge of where you are putting your money into. Just don't invest because the market is now bullish. Don't put your money there. There are other stocks on the Nigerian stock market that if you put your money there, you'll be able to sell again because of liquidity. So get good financial education. Watch podcasts, go for conferences, read books that will help you to understand where to put your money into. And then lastly, the stock market is not for everyone.
Okay.
We have the money markets there. Maybe if you're a low conservative investor, the stock market is not for you. Go for money markets, go for treasury bills, go for FGN saving bonds, go for commercial paper. But if you can take the risk, you are maybe a conservative or maybe medium risk taker, you can come to the equity markets. And I tell you, there are good companies in the equity markets that you can invest your money into. Don't forget, financial education is very important, because if you are investing your money into what you don't know, you are likely going to lose your money at the end of the day.
You're likely going to lose your money at the end of the day. That's word. Thank you so much, Peter, for joining the show this morning. It's great to have you here. And we hope to see more of you in the coming episodes.
Thank you.
Now, that's all we have for you today on The Business Lens. Do follow us across all social media platforms at Rapid TV. You heard him. We talked about the fact that you need to get, financial education, to know where to put your money, to know how to make your money work for you. My name is Divine Alex, and don't forget to stay with Rapid TV. Bye for now.